And our prediction at Bitwise is it'll get to $200,000 this year. I think this cycle, which I'd really say lasts through this decade, I think it probably gets to about parity to gold. At current prices, that's a little over $1 million. I think this is a summer of accumulation because this is like the end of the window where you can get in ahead of institutions. And if you have no hedge or you wait to put your hedge on, it's just way too late. Right now, if you're at zero, you're 100% exposed to the fiat system. The really important thing is just, so I don't think anyone can out-sailor in what he's doing, but you're gonna see.
Mr. Matt Hougan, thank you so much for being a playable character and joining me here today in a sea of non-playable characters. Thank you, sir.
Thanks for having me. I'm so excited to be here.
So for those of you who don't know, Matt Hougan here with us today is the CIO, the Chief Investment Officer of Bitwise Asset Management. So we have many things to touch on here today. You are the man to speak to on all these important issues that we are seeing in the markets and across the world here. We were just talking offline a little bit about divergence, the correlation Bitcoin's had to much of the legacy assets and where that might be headed and some of these divergence factors we've been seeing. But we were talking about the summer of accumulation and why it's so important right now for people to be accumulating as many bits of Bitcoin, Satoshis of Bitcoin they can, because we are in this phase where you guys are seeing stuff on the inside. I would love for you to unpack this and what you guys are seeing with the work that you do daily and why it's so important for people to be really stacking as much as they can right now.
Yeah, absolutely. Great to be here. Great opening question. Yeah, it is, if you think about what's happened to Bitcoin over the last 18 months, there's really been two big changes. One, it's become significantly easier for traditional investors to access it with the advent of ETFs and some of the regulatory improvements. It's been de-risked. And at the same time, the urgency of accessing it has increased with sort of rising debts and deficits and concerns about fiat debasement and people wanting broad-based exposure. The reason I'm calling it the summer of accumulation is behind the scenes every day. What Bitwise does is it talks to these large institutional investors and large wealth management platforms, people who control hundreds of billions and trillions of dollars. And no joke, every week, a new one of these platforms turns on exposure to Bitcoin. They let people invest in it for the first time ever. Really, almost every week, we could say another $1 trillion opens up to Bitcoin. We're going through this one-time phase where institutional investors are moving into the Bitcoin space. And there's, trillions of dollars of money that needs exposure to Bitcoin. We have this vanishing window to get in ahead of those trillions of dollars of institutional capital. And I just think you have to make use of this summer. Every time the Bitcoin ticks sideways, I think of it as a little gift to me, more time to accumulate sats, more time to build the Bitcoin position before the largest money in the world comes in. This is a one-time deal. It'll happen. The price will go higher, in my view, significantly higher, and then we'll be at a new normal. So this is like the end of the window where you can get in ahead of institutions, and it's changing really, really fast.
I would love for you to touch on the Muhammad Al-Arian thing we were talking about offline and just kind of this rotation we're seeing right now. I would love for you to touch on that.
Yeah, it's absolutely amazing. I mean, he wrote an article in the Financial Times. He tweeted about it, how in these recent crises that have hit the world, people have not rotated into Treasuries as a safe haven asset. For the last 40 years, when there was a macro crisis or a geopolitical crisis or some shake in the financial market, the first thing traders did, the first institutions did, was to buy US Treasuries. They were the safe haven store of value. And so you would see yields drop and liquidity increase. And Muhammad Al-Arian, obviously one of the most important investors in the world, ex-PIMCO, part of Allianz, a global force, not a Bitcoin degen, noted that we're not seeing that at all, right? During these recent macro crises, the yields don't move on Treasuries and the volume doesn't increase. Instead, where the money goes is first into gold and then within a day or two into Bitcoin, right? In other words, the world's safe haven asset is shifting from Treasuries to hard assets like gold and Bitcoin. And that's just an enormous change. I mean, that's a sea change, 40 years of Treasuries being the safe haven asset. We're not making this up. It's looking at the data. The data is showing investors no longer treat that as such. Treasuries are something else. The safe haven asset, the asset you rotate into, is gold and Bitcoin. And that's like a canary in the coal mine in terms of how portfolios are going to orient themselves. They're all going to have exposure to these hard assets, these stores of value, because they're the biggest hedge against, sort of the really destabilizing risks in the world. It's just really notable to me that that's happening right in front of your eyes.
Do you think that we have even this cycle, maybe, or this year, this bull cycle? Will we have this divergence of people I guess the question really is, when will people start realizing that Bitcoin is the risk off asset, that Bitcoiners, like, we all know it is, we can all see it's the lifeboat off of the sinking Fiat Titanic. When do you think people start really waking up?
I think they're starting to. I think if you've looked throughout this year, there have been moments where the stock market has fallen during the tariff tantrum, for instance, and Bitcoin has diverged. In fact, this is actually, that was actually the first macro shock in Bitcoin's history, really, where it had an inverse correlation with stocks. And I think what separates this macro shock from the past or the tariff macro shock, it was the first time that there were ETFs. It was the first time that there were options on Bitcoin. So it was the first time it was easy for traditional investors to access it and use it as a macro tool. And what they showed is, sure enough, they're going to use it the way it is, as a hedge. I think if you look, particularly over the last few years, what we've seen is the same pattern. Sometimes on the day of a macro shock, you see Bitcoin fall. I think the studies show that if the NASDAQ falls 2%, Bitcoin tends to fall 2.6%. But if you look over the next week or the next month, at least over the last few years, you've seen Bitcoin recover and then some. So I think these correlations are going to continue to go down. I think it's even happening now. It's just not quite at the reaction trigger. It takes the market a few days to recalibrate. But what we've seen is that once it sort of gets its footing, it finds its way into Bitcoin as the hedge exposure. And I think we're going to see this decoupling increasingly. It's just a different asset today. It's less of a risk asset. It's more of a hedge asset than it was 5 years ago. It was much riskier. So I think this is a natural evolution of what Bitcoin is.
Do you think that there's an invisible crash going on? Like, one of the guys, 15 years ago, when I was leaving Michigan State, when I was leaving college, and that crash was going on, that's when I was pouring through The Creature from Jekyll Island and going through all what is monetary history, what is it, learning it, understanding what money was. And one of those things that always struck me was the invisible crash. And people would take, generally it was gold bugs at that time. It was right when Bitcoin, obviously the white paper is being released, but people would take hard assets, or generally gold maybe, and then divide that against the economy, the Dow, things like that. And you would see these different charts that would show, hey, we're in a crash right now. But because of the nominal price on things, or the currency printing that was going on, it was hard for the average person to see. And where I'm going with this is, it feels like when some of the famous charts are priced in Bitcoin21.com or whatever it is, and people go look, and everything's just going to zero in terms of Bitcoin. Is that the crash now, in a way? Like, everyone's looking for, like, when is everything going to come down again? And in kind of these Chicken Littles and the doomers, and there's all these different segments of society. But have we been kind of just looking in the wrong places, maybe? And gold is some of that, but also Bitcoin now, and this new space that's evolved and really here now. Is that the thing that's been sucking up a lot of that and showing the actual crash that's been happening, and what we see manifested even on the streets today, and like what's been going on for years now? Was Bitcoin the thing that was just really the canary in the coal mine, or the thing that was illuminating it for everybody?
Oh, I love that so much. I think that's absolutely true. I mean, you've seen the Coinbase ads recently about house prices denominated in Bitcoin and how those prices are going down. And that's compared to everyone else's experience of these dollar-based, fiat-based home prices just going to the moon. I do think that's a significant divergence. I mean, we've talked a lot about, since COVID, the US dollar lost something like 28% of its value, and Bitcoin's up 30x. Wow. I don't know, like there it is right there for you. And I think that's going to continue to happen. I do think it's a silent crash. It's a boil the frog element. But I think it's actually happening at an accelerating rate. It's hard to look at those debt charts and the deficit charts and not understand that this is happening at an accelerating rate here in the US, much less around the world. I mean, we have the cleanest dirty shirt in the world from a fiat perspective. So if you think we're experiencing this silent crash here in the US, imagine what it feels like in other markets that are even in worse shape. But I absolutely think, I love that analogy. I think that is what's happening.
I would love your thoughts on the what it was seemingly coming with the printing. I mean, I think it was, I don't know who it was now, actually, now that it was a headline of a historic, it was a very big legacy news publication that was saying a historic dollar devaluation is coming and has to come. Obviously, JD Vance is calling for it. There's the politicians calling for it. This knows no boundaries. This is going to happen no matter who's the president. The financial repression that is coming, I feel like it's just binary in a way where it's either going to be a deflationary depression like 1929, or it's going to be this, like you said, frog in the boiling pot, this printing of financial repression. We're going to keep the currency printer and hopefully almost like extend it where we can find solutions in the interim, a la Bitcoin, AI, some of these things that are happening. But I would love for you to explain why, because I talk to people all the time, and I know you do too, where they think you can round peg square hole, like we can fix a system inside the system. Can you just elaborate on why the currency printers have to go? Like why is it that we have to go through these shenanigans, the debt ceilings and all this stuff, and why a lot of that's fake to be honest, but why this charade has to keep going because the system wins. I'd love you to unpack this a little bit.
Yeah, absolutely. I mean, a lot of it is just math, right? I mean, we pay $1 trillion in interest income every year just to finance the other debt, right? That we already have. So when we start the year, we have to pay $1 trillion just to tread water, and which is a crazy amount of money. I mean, $1 trillion is real money, and that's at interest rates at the levels they are today. The really challenging thing is that as we continue to accumulate debt and deficits, and remember, we're running a $2.5 trillion deficit at a time of economic growth. Like, I see all these projections about how the deficit will grow in the future, but if we're running $2.5 trillion at a time of economic growth, what do we do if there's an economic, issue? What do we do if there's a recession or another pandemic or another great financial crisis, right? That $2.5 trillion is going to go to $4 trillion or $5 trillion. And the problem is we have to pay interest on that. So it becomes not 25% of our national budget, which is what interest income is today, but 50, 100, and it compounds from there. And it just is impossible to get out of, right? It's as if, maybe to make an analogy, people can get their head around. Imagine if you had a salary of $100,000 and you had $150,000 of credit card debt, and you were paying 27% interest, and your mortgage was bigger than your annual salary, right? Like, there's no way to get out of that. You end up in bankruptcy. The US can't end up in bankruptcy. What it ends up is either in austerity, which means it slashes spending, or in printing. And the reason most of us think it ends up in printing is the U.S. shows no political will to live through austerity, right? We couldn't even, we have maybe the best setup to cut rates from a political or cut spending from a political perspective, and we're spending more this year than we were last year. So there's, the gig is up on that. There's maybe this Hail Mary hope that AI leads us to 5% GDP growth forever, and maybe that happens. But that's kind of like hoping, that you'll, get appointed the CEO of a new company when you have a mid-level job, and you'll make 10 times more money. It's just not practical. The most likely scenario is printing. And even if you think there's a chance this AI Hail Mary will save us, because if you grow the economy enough, you could work your way out of debt. The same way as if you grew your salary enough, you could work your way out of this credit card debt. Even if you think there's a chance, you definitely don't think it's a 100% chance. And if it's a 50% chance, you need to hedge yourself against the other 50%, because the escalating printing is so destructive to economic wealth that if you have no hedge, or you wait to put your hedge on until we're in the middle of that process, it's just way too late. So you can even hold out hope for this AI miracle. I hold out hope for it. But as you hold out hope, you need to be hedged against the more likely scenario, in my view, which is that the printer goes burr, and that's how we work our way out of this debt. And that means buying Bitcoin today, right? Again, that's why it's the summer of accumulation. You have this opportunity to do it before the institutions arrive and before we do get into this spiral. Make use of it, right? That's my message. Make use of it.
Yeah, you kind of just touched on in finishing that. What I was going to ask you next is like I want to bring it back to the average person. And again, we kind of talked about some of the ills, and then in some of the reasons, and what's happening around the world right now. And it feels like I just saw you recently in the last couple of weeks saying that you think we're at inning 1 or 2 for this mega trend for companies coming into Bitcoin, and just probably just overall Bitcoin adoption and what's happening. But then conversely, like what we've been saying, and the reason that Bitcoin is growing so much, is the antithesis to this system, which we just outlined. Is it feels like, I mean, to you, does it feel like we're in inning 7, 8, 9 of the fiat system collapsing? Like, is it the opposite? Like, how does the average person prepare for what's about to happen?
Yeah. It feels like we're in sort of the exponential part of the curve, right?
Yeah, thank you. That was, yeah. Yep.
I've been in and around this industry for a long time. And so, you had people 20, 30 years ago warning about these things, but at the time, the debt to GDP ratio was relatively contained. The deficit levels were relatively contained. But starting with the global financial crisis, you can look at the charts. You can pull up the charts of our global debt, our US debt, and it just skyrockets. It's the most up only part. And I say we're at the sort of exponential part of the curve, the sort of bending upwards period, because this conversation is now a normal conversation, right? This used to be a fringe conversation.
True.
This is now a conversation that Wall Street analysts have, that CEOs have, that companies have. That's why you see companies putting Bitcoin on their balance sheet. This has become normalized. And we're at the part of the debt accumulation phase where it just starts to get out of hand, right? Like a few years ago, maybe we were paying a couple $100 billion on our debt. That felt manageable. Now it's $1 trillion, right? That feels unmanageable, and it escalates out of control. Any consumer who's been in a high debt situation knows this feeling when it sort of escapes your grasp and sort of runs away from you. And that's the part we're at now. It's just this accelerating part of the curve. I don't think we're at the point of fiat collapse. That could still be years off, but you're going to feel this acceleration. It's going to feel more extreme. It's going to feel more uncomfortable. I could be wrong, but I think that's what's in the cards from a math-based perspective. I just think it's hard to work out of it any other way.
I could not agree with you more, Matt, truly. And speaking of the average person, what do you think, just segueing just a tiny bit, what do you think in terms of just helping the average person and trying to get off this system and into a new lifeboat? What do you think an American, we'll call it a Bitcoin bill, I know Senator Loomis is working on these things. Many people are working on these things in the background. What should it look like in your opinion? Is it no capital gains, a de minimis exemption, legal tender? Like, what should America? Because it feels like this two-parter. What should it look like in your terms, or what would you like to see? But also, it feels like from me, and I know many people I speak to, that a lot of people around the world are looking at America to say, we're waiting to kind of see what they're doing, and which is. It's funny because you feel like game theory, and I'm sure there's stuff going on in the background, right, that none of us even know about, right, on the network. But it does feel like there's a sense of everyone's kind of like looking at each other of like, game theory wants to play out, but at the same time, what is America doing? And then, okay, now we have our plan or whatever. So kind of a two-parter. What would you like to see in a bill? And then also, what is your sense of just around the world of what people are feeling, or what they're waiting for before they jump in?
Yeah, absolutely. I mean, the first and most important thing is to secure the right to self-sovereignly hold Bitcoin, which I know seems like a basic fundamental, but that was a fundamental that was potentially under threat a handful of years ago. And we need to have that basic right. And that's not, it's not trivial. It's worth remembering that in the 30s, the US government banned the private ownership of gold, right? We don't have a perfect track record in this space. And so making sure that is established as a right. And we've heard great things out of Washington from that perspective. So that's like a starting point. As a broader base, I think some de minimis transactions that aren't tax reportable would be fantastic. I think those fundamental sort of right to mine, right to hold Bitcoin, that's really where I'm focused at a firmament level. I think I would, separately under a different veil, I do love the existence of the U.S. Strategic Bitcoin Reserve. I would love to see that accelerated. We have a substantial holding in gold. I think it makes sense from a geopolitical perspective for reasons we can get into if you want, to also have a substantial portion of Bitcoin on the U.S. balance sheet. So I would love to see that. I do think countries around the world, I actually think it's moving really fast. One challenge maybe that crypto runs into is we all live in a 24/7, 365 move really, really fast perspective. When I look at what's happening from a geopolitical perspective, in terms of Bitcoin adoption and progress on Bitcoin regulation, I'm actually amazed at the speed, right? We're seeing multiple countries build up positions in Bitcoin. We saw Abu Dhabi, we saw Pakistan, we have El Salvador, we have Bhutan, we have a number of countries around the world that are sitting on Bitcoin hoards, which are not selling them, which is another sort of tacit endorsement. So I see it moving in a positive direction. I think the game theory is playing out. It's just crypto is impatient. The world moves on a slower scale than crypto. So I'm pretty optimistic in terms of what I'm seeing around the world.
Yeah, it is funny you say that. It was, you look at gold, which I would love actually have a follow up on this as well. But the gold just in general, it took hundreds and hundreds of years, and now with communication around the globe, it's only been 16 years, so we do get impatient because of our attention span is so short. So when you zoom out, you realize how quick it actually has been. So it's a great point. I would love for you to unpack just a little bit more about just the gold and Bitcoin, strategic Bitcoin reserve, and just kind of how you see that playing a role of whatever it is, budget neutral strategies to accumulate more, your thoughts on that. And because this is something I was going to get into later with, but this is, there's a lot of people in the cypherpunk segment of the Bitcoin crypto world where they see the ethos eroding, in their view, right? So I'd love for you to just unpack some of this and just how you think about this and gold as well. So gold, Bitcoin, how you see these playing. Maybe do we get rid of some of the gold for Bitcoin, or like, what do you see? What are some strategies, the ways you think about it?
Yeah, absolutely. I think we could sell some gold and rotate it to Bitcoin. Look, if you look at the global hard asset store of wealth market.
Hold on 1 second. If you are holding your Bitcoin on an exchange still, or sharing your keys and your KYC information with a third party, everything you're learning about right now is completely moot. This is your wake-up call. You are only self-sovereign if you alone hold the keys to your wealth. Bitcoin is the first and only asset in human history where humans can actually custody entirely their asset. Custody sounds daunting at first, and believe me, it was for me 10 years ago, and I missed a year or two of massive gains, and I don't want that to be you. It's exactly why you need to talk to my friends, Tony Asback and the Bitcoin Way. His team will train you to do it right the first time. We just interviewed Tony the other day, has 50,000 views, an unbelievable response. People love him and his story and what he has to share in his mission. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. So quit sitting on your hands like I did a decade ago and get started today. Again, that's thebitcoinway.com/Brandon. Now back to the show.
Today, your gold is $23 trillion. Bitcoin's, let's say, $2.3 trillion. So it's 9 to 1. If the US government is 100% Bitcoin, 100% gold, they're off market. Right? The market is saying 9 to 1. It would suggest you should sell 10% of your gold and buy Bitcoin just to be neutral. Maybe you want to overweight, have more Bitcoin than the market, et cetera. But I think the government is off weight. One note just to share on why I think it's important for the US, and then I can talk about whether it's good for Bitcoin. A funny thing happened when the Bitcoin reserve was announced, which is Cliff Asness of AQR who's a famous hedge fund investor, wrote a screed about why it was a bad idea. And his commentary was that it's akin to like sort of accepting that there might be another global reserve asset beside the dollar. And the phrase he used was it would be like the US building a Chinese yuan reserve. And I actually think that, to me, encapsulates exactly why we need a Bitcoin reserve, which is that if you're a realist, you're looking at the world today and you're saying we're moving from a world where the US was the hegemonic sole power in the world and the US dollar was it, to a world where that is no longer the case, right? The US dollar's share of global reserves is hovering below 60. The world is considering multiple different alternative reserves. Maybe it will be a BRIC currency. Maybe it will be the yuan. Maybe it will be the euro. As I look at that, if I'm the US dollar and I'm like, I'm inviting someone else to sit at the table because I can no longer hold 100% of the table, I'd rather it's a non-political currency than it is a currency of one of my competitors, right? I'd rather it's the US dollar and Bitcoin than it is the US dollar and the yuan. The US dollar and a non-political currency is a better outcome for me. And so I think establishing a US strategic Bitcoin reserve sort of greases the glide planks toward a world where if there is another reserve asset, it's actually an apolitical asset as opposed to the currency of one of our competitors or peers in the world. And I think that's a better world for the US. So that's why I think it makes sense for the US perspective to do it. For Bitcoin, I get the cypherpunk resistance to it, which is there's this irony of governments owning Bitcoin.
Mm-hmm.
But I would say two things to it. One, if your dream of Bitcoin is a dream of it being a globally important monetary asset and being a predominant way people save and even eventually spend in the world, it's hard to imagine, unless you're taking a like Mad Max view of the world, of that world coming into the fore without governments intersecting with it. It's just, you could have a theory and a dream, but there is also reality. And unless you're envisioning like a complete reworking of how the world works and an absence of nation states, which is just like too far for my mind to go, you have to imagine governments are going to interact with it. The only risk is if the government becomes an economically dominant controller of Bitcoin. What you want is ownership to be decentralized. So it's fine if the US government owns some. If the US government owns 40% of Bitcoin, that's too much. But if they own 5% of Bitcoin and a few other governments own a few percent of Bitcoin and private companies own Bitcoin and individuals own Bitcoin and ETFs own Bitcoin, and then that's great. All you want is max decentralization. And I think governments can have a seat in max decentralization. They won't control the protocol unless they have such an economic weight that they could destroy it if they wanted to dump all their Bitcoin or something. And we're just not at that point. So it's worth monitoring that, but it's not worth restricting ownership or sort of preventing governments from owning it. That would be more anti-Bitcoin than just letting it happen and making sure it's decentralized.
Yeah, it's funny because I to what you're saying, I mean, I see both sides, and it's I probably take the more of the cypherpunk stance. However, like you said, you have to be a realist about it at the end of the day, because like you said, it's not that it doesn't happen as an iceberg flipping all of a sudden and like society collapses and like, okay, now we're going to rebuild the new system. It's just, that's not how it works. So it's going to be, Bitcoin, everyone looks at Bitcoin as a Trojan horse, or a lot of people do. Well, you got to get the Trojan horse inside the wall somehow, right? So like that is that. I mean, it's probably the best analogy I have. I mean, if you're looking to do that, it's probably not going to be an iceberg flipping and just overnight things are collapsing. So what's the other way to do it? Well, it's slowly over time chipping away. That's the Trojan horse, and just we got to work our way into that. So, and to your point, the incentives, as we all know, the incentives of Bitcoin, which we can touch on here in a little bit, they lead you down that road where governments are people. There's groups of people. So if you start educating people about Bitcoin and then they hold it, that's good for all of us. And they will start understanding, and Bitcoin changes people. It's changed all of us. So like we have to take faith in that. And that's, my plea to both sides of like, just take faith in the process, and what's happened to all of us will happen to other people as well as time goes on.
I love that. Good analogies. Those are brilliant.
Oh, thank you. No, thank you. So I want to segue a little bit to you getting orange pilled. I would love for you to just touch on this a little bit. What clicked for you when you really, because you've been in this over a decade. You've been studying money and in this world for so long. I would love for you to touch on this and just explain to people what your orange pill moment was and just your journey of just coming to Bitcoin and then seeing it clicking. And then as you're going down the rabbit hole, how much time you're spending going down this rabbit hole. So I'd love for you to unpack this a little bit.
Yeah, absolutely. There are a few seminal moments for me, to be honest. the first I should say is I come from an ETF background. ETFs are tools that people use to invest. I was very early in that industry. Started running ETF.com, my company I ran before Bitwise, when ETFs were a few $100 billion. Now they're 15, 30 trillion. I bring up that story because people love ETFs today, but they hated them originally. There were congressional hearings about ETFs destroying the American dream. The Financial Times labeled them weapons of mass destruction. There were countless Twitter arguments about how they're horrible for investors. Vanguard labeled them like tools of mass insanity or something. And I bring all that up because my experience in my career before crypto existed was that you could have a financial technology that's better for the world, that makes things cheaper, lower cost, more tax efficient, more fair, and the world can hate it and they can be wrong. And my experience in the ETF career was like watching the world wake up to this thing that I looked at and was like, this is just better. And the world eventually came around to that view. And that's important to me because when you first encounter crypto, the world has the same reaction to it. It's this new financial technology that people are skeptical of, that people call weapons of mass destruction, that's whatever has died 13,000 times, that's got negative articles in Time, in the Financial Times, et cetera, that has congressional hearings, that has senators launching wars against it. And I think it was important to my journey that I had seen the world be completely wrong about something. And that gave me confidence that when I started looking at crypto and it resonated with me, that maybe the world was wrong again. So I think that was really helpful. The next so I was primed for it. The real moment started with me with just one very serious person, a woman named Kathleen Moriarty, who was the first lawyer on the first ETF. She's a legend. She told me to take it seriously. And before then, I had been aware of it, but I never spent any time studying with it. But when you have someone you respect, and this was in 2012, 2013, tell you to take this thing seriously, it really makes you focus on it, right? Because here is something that was still viewed as a plaything that no one was evaluating. And this legend in the financial space, who I greatly respected, told me to take a look at it. And as I dug into it, it's not that hard to understand. That's one of the beauties of Bitcoin. At a superficial level, you can read the white paper and you can understand it. The elegance of it, the efficiency of it, the fairness of it, all just resonated with me and pattern matched to what I'd seen with ETFs and brought me into the crypto ecosystem. I will say this, my appreciation for the need for a new form of money in society has increased substantially since I got full-time involved in crypto. So when I joined Bitwise in early 2018, I understood how it worked. I thought it had a role to play. I really appreciated the efficiency and elegance of the system. I appreciated the ideas of decentralization. The technology seemed inevitable to me, but I didn't appreciate how much the world needed a new form of money. And that may be because its need has become so much more apparent post-COVID and post the drastic acceleration of debt. It's become like a nice to have to a must have to me. And my conviction, therefore, in not that I always was sure it would exist, but in how central it will be to society has really increased over the last 5 or 6 years. Really has changed, inflected in my mind.
That's a great story. Do you see in saying that, do you see the financial system being built? And again, we don't know the timeline. It could be 5 years, could be 50 years or what have you. But do you see the financial system, like you said, it was a nice to have. It's kind of like, oh, this is, I know Jeff Booth talks about this all the time, right? You can't fix the current system or the current reality within the current system. Do you see at some point the financial structure being built on top of Bitcoin, these rails, this industry, Lightning, the different layers, things that are being built? Is that kind of what you see when you extend out your horizon?
Yeah, I see. It definitely gets fuzzy as you get out. I see it being a central place. I feel great
I want you
certainty
to
that
predict the future, Matt. That's what I want
yeah,
you to
I
do. I want you to
know,
predict the
with
future for all of us.
precision. Um, I have great certainty that Bitcoin will play a key role as a global geopolitical macro tool and a currency in the world setting, and have a place at the table as one of the world's reserve assets. And I have a great deal of confidence and extreme clarity that blockchain based rails will be the way all assets move around the world. I think there is still to be seen, whether there are these savings tool in Bitcoin and then spending tools in stable coins, or whether Bitcoin plays a more central role. I think that remains to be played out, and I'm aware that legacy systems have a lot of weight, right?
Yeah.
So when I think of Bitcoin as a investment, the way I describe it is you get this global monetary asset as your primary investment, and then everything else is like a free option that you get on top of it. So I do think it's all moving to blockchain based rails, but I'm aware legacy systems have a lot of weight, and it may be that that stable coins play a role for quite some time, and token based asset movement plays a role for quite some time.
Do you see? Yeah, and that was one of the questions I was going to ask you. Do you see a world? And again, it could be. I know a lot of people think that money, believe that money converges to one. I tend to be one of those people where it all converges to one. But again, it just takes time. The legacy world, like you said, has a lot of weight, a lot of pull. There's a lot of education to be done. Most people don't even own Bitcoin or crypto or whatever it is. So there is still this process that has to go through. When you look at Bitcoin versus some of the others, altcoins or whatever it is, do you see the other companies or other countries using private networks that they could perceivably be using versus Bitcoin, which is open, decentralized, like you said, a non-political currency? Like when you look at that, how do you see things, and what do you see behind the scenes maybe that not everyone is privy to, where you are, because that, for me, I try to square that circle, and my answer always comes back to, well, it's got to be Bitcoin. If I was a random company, or if I was a country, I wouldn't put my trust in these other things. I would only trust the thing that's trustless. So, but that's my opinion. How do you see that unfolding?
Right. I mean, that's sort of like a classic power dynamic question,
Mm-hmm.
right? Because the reason you
Prisoner's
wouldn't
dilemma, game theory. Yeah. Yeah.
is
Yep.
the power of the regulatory state and the power of the existing system,
Yes.
and the power of sort of reputational things. And I think it's over long periods of time. And the reason Bitcoin wins out in many people's minds is that in an absolute sense, it should win out. But those power dynamics are very personal, right? And
Mm-hmm.
they're very strong in many cases. And, we
It's not
shouldn't
what
be
you know, it's who you
naive
know.
that those can persist for long periods of time. It's very
Mm-hmm.
possible that you get multiple systems around the world. It's very possible that it's idiosyncratic. I think the important thing for the world is that the Bitcoin system exists, even if it just acts as a release valve, right, to keep these other systems in line. I
Mm-hmm.
think that's a huge benefit to the world, and that maybe is part of the dynamic as well, right? Like even if we just go back to money, I've always said that there is a world where Bitcoin just acts as a brake on fiat abuse. And the existence of Bitcoin and the potential to fail over to Bitcoin means that fiat behaves better. That's
Mm,
actually
yeah.
that's actually a very positive world. And so
Right.
I think I think there's some reflexivity into your question in terms of how these other systems behave, and how they line up against this other system. So yeah, really really hard to know, but a great question.
Yeah. No, and that is a great answer. It's like I mean, it's a monopoly, right? And if you have all of a sudden competition, now you got to start changing how you're doing things, right? So
Yeah.
if you have, so it's a great answer by you as well. Um, so when you, going back and just wrapping up, when you said you had appreciation for it, which is probably all of us, so I appreciate your honesty, because that's probably all of us to a degree. I know when I started investing, I was all over the board, and I didn't I didn't have an appreciation for it once I was in it, and which is, people get skin in the game. We all kind of do it. And once we're in it and then we start studying it more, you're like, oh my goodness, like this is way beyond what I ever thought. So I would love for you to unpack, like, once that moment was hitting you, some of those orange pills, red pills, whatever you want to call them, whatever people want to call them, were you just going down the rabbit hole at that point, kind of like studying everything you could? What was that like for you as things kind of clicked and you realized, well, this is much more than I initially thought?
Yeah, absolutely. It was a combination of studying and then events, right? So like when I came into Bitcoin, and sort of understood the fundamentals, and I spent certainly, I would say probably 2 years, even full time at Bitwise, really digging into the fundamentals before it really clicked, before it anchored in the deepest part of my brain. And once it does, it sort of all makes sense in a holistic sense. But then you start to ask yourselves, well, how far could this go? And the way that worked for me is people would say things that were very, very far off, like it will be the only currency in the world. Or people would say things that were further off, like governments will adopt it as a reserve asset, or it will be used for international transactions, or it will be used for daily transactions, or it will just be digital gold. And maybe that's sort of the cascade of potential uses, right? Before you get to a full financial system built on Bitcoin rails. And sort of what's happened to me over the years is when I first came in, what made sense to me was digital gold, a new way to store wealth without relying on a government or a bank in this perfect, unhackable system that I could carry around in my mind. Amazing, transformative, multi-trillion-dollar use case. And then I was like, yeah, these other things, maybe they'll happen. But what happened to me, the sort of the orange pilling moment, was when you say that, you say to yourself, well, what would need to happen for these things to happen, right? And maybe it's you need regulatory developments like I don't know, like a Bitcoin ETF is a condition before we get to this next stage. Or maybe you need governments to start owning Bitcoin, or maybe you need regulations that put Bitcoin on a firm setting, or maybe you need institutions to buy Bitcoin, or maybe you need pension funds to buy Bitcoin. Maybe you need it broadly accepted. Maybe you need a broader liquidity market that brings down spreads and means it really is transferable anywhere around the world, 24/7, 365 in size, because liquidity is central to how sort of core assets in financial markets work. And what I watched is us getting all of these things, which I initially weighted as unlikely, right? Like unlikely that the US government would have a strategic Bitcoin reserve. A year ago, that was unlikely. I'm not just saying that. Polymarket said it was unlikely, right? Like it was unlikely. And as these sort of doors knock down, you start thinking, well, like, actually, how far can this go, right? And that's been my conviction, is sort of, I had a core thesis and I thought everything else was like unlikely unless we got these events. And we just keep getting those events. And at some point you're like, wow, that is a lot of events. And it gets to be pretty exciting. And that's continued to be what I see, right? We continue, maybe I'll share this other story. I talk to people all the time in traditional finance, year after year after year, about Bitcoin. I go to these conferences and I give speeches. And it's incredible to me because since I've been giving those speeches, Bitcoin's up about 12 or 13x. And anyone who listened to me originally has done well, which is great. But there are plenty of people who have come to these speeches every year for 7 or 8 years and have never bought Bitcoin. And at the last one, I sat down with this guy and I was like, what would it take? Like, write down the event that it would take to convince you that this thing is not going to zero and that you should have some. Because if it was, that we needed ETFs, we got that. That they would need to be successful, we got that. That institutions would own it, we got that. Pensions, that governments, what is it? And he thought about it. He couldn't think of anything else. And so he went off and bought Bitcoin. And I share that because it just keeps knocking down these barriers, right? Which is pretty incredible and makes you think, this thing really has legs.
Yeah, that's a great story. It makes me think of too, and just a bunch of the things we've been talking about. Where again, my journey 15 years ago, leaving school, was Mike Maloney, Robert Kiyosaki, really studying money, gold and silver. And I think Mike had started like in 2008, maybe, tracking the death of the dollar. and they stopped in like 2018 because there were so many nails in that coffin that he couldn't even keep up with it anymore. Because it just like you had said something earlier, it made me think of it. There was like a slow trickle, and then it just eventually became more and more and more. But to your point, what you were saying again, like the markets can be irrational much longer than any of us can stay solvent, really on either end of the spectrum. So they can be irrational on either end. And here we are. I mean, it's still 15 years later, and it's all these signposts along the way on the freeway saying, hey, exit now, or something crazy ahead. And here we are, we're still going. So to your point again earlier, this thing can go run much longer, the existing system, the fiat system we're in. So that's why I think it's important for the average person to understand. And it's tough to live in both worlds. You have to live in both this digital space and the old legacy fiat space. You just have to. And that's the world we are in. That's what makes it tough for so many people, which is wild. What are some of the of Bitwise, what you guys are working on now? What are some big goals, initiatives that you guys are working on now, as we really, I guess, already the last half of 2025, which is wild to even think about. But what are you guys kind of working on? What are some of your big initiatives and goals?
Yeah, absolutely. I mean, the number one thing we do every day is go out and talk to people about Bitcoin and about crypto. So we do something like 15,000 meetings a year with financial professionals. We're at hundreds of conferences every year, and we're continuing to open up these platforms to access Bitcoin. That's really Bitwise's role in the world, I think, is to educate people about this incredible market opportunity. We have the advantage of sort of straddling crypto and TradFi, so we can communicate in both worlds, and that's probably the number one priority. Beyond that, we're an asset manager, so we continue to develop new and novel products, giving exposure to things like broad-based crypto assets. We hope to turn our index-based products into an ETF later this year. We have a number of income-based strategies. And probably the last thing we're working on, we're doing a lot of work on how to generate income off of large Bitcoin positions. We hear that from institutional and large retail investors alike, that they have a large Bitcoin position that they don't want to sell. And what can they do to generate, to your point about living in both worlds, what can they do to generate a handful of percent return a year to pay their mortgage and college tuitions for their kids, while still holding on to their Bitcoin upside? So there's not super easy answers there, but there are answers there. And that's something that we're spending a lot of time on, because increasingly there are people with large positions in Bitcoin that want to maintain those positions. They don't want to sell their Bitcoin, but they do need to live in this fiat-based world. And so we're working on generating income for those customers as well.
How do you guys in the financialization, which again we've been kind of touching on and going back and forth on the whole talk, and it's an important part of the growth of the system, obviously, and tapping into whether it's liquidity pools and just things that are kind of sitting there and they say, hey, I want a part of this, and they just couldn't before or whatever. And to me, the marriage between that and also self-custody, for instance, and that being one of the huge things that really orange pilled me, and just realizing it, because it put a stark contrast between that and every other asset, where it was, wow, I really don't own any of these things. Even your own home, you might live in it, but if some guys show up and knock on your door and you're not paying your property taxes, well, you'll find out really quick. How are you guys handling that going forward? That real innovation of self-custody, what kind of plans do you guys have for that? Anything you can disclose, or just, moving forward as this space kind of evolves and goes down more that road?
Yeah, I'd love to say, three things about that. First, as I mentioned, when you asked me what I want to see in the bill, this is the fundamental thing, right? This is at the core of Bitcoin. We love people who self-custody. Obviously, there's some irony in the fact that I run an ETF, which is almost the other side of that. But we recognize that this is the core of what Bitcoin is, and we love the people to do it. The second thing that I note, just towards that ETF thing, people in Bitcoin sometimes ask me, how do you sleep at night doing this? And I point out the example from the gold ETF launch, which is a fun example for you. So it's the closest analogy to a Bitcoin ETF. The gold ETF launched in 2004. And they did a study of the number of owners of physical gold before and after the Bitcoin launch, or the gold ETF launch. And what it showed is the gold ETF launched, and it pulled in a huge amount of assets, right? The same way Bitcoin ETFs have, because people love ETFs. But actually, the number of people who who owned gold bars and coins rose dramatically as well. And I think that's going to happen in Bitcoin as well. And the idea there is, if you're a traditional investor, you've never touched Bitcoin before, it's easier to buy Bitcoin in an ETF in your Schwab account. But as you mentioned earlier, it's sort of like invest and then investigate. Once you own a little bit, you get to know more about Bitcoin. And many of those people will want to self-custody themselves as well. So, maybe Trojan horse, I don't want to use that to refer to my ETF. But I do think it's like an on-ramp to the broader Bitcoin system. In terms of what we're doing, we think about it all the time. From the ETF perspective, I would love to get to the point where we could do in-kind redemptions, which would let people take physical delivery of their Bitcoin. We're a long way from that. That's not SEC approved. There's no format for that, but it's something that I would love to eventually do. We do SMAs for customers where we help them hold their own coins in a qualified custodian where they have the right to them. Bitwise doesn't, but maybe we manage that exposure for you. So we're trying to always get our customers closer and closer to that. Well, at the same time, recognizing that for many people, ease of use is a huge win. And having some Bitcoin is better than not having some Bitcoin, and the ETFs at least serve that purpose.
Yeah, absolutely. I think it's important to marry those sides together, and it's great to hear you guys are working on many of those different angles, which is huge. What I'd like to segue a little bit to just a couple just fundamental Bitcoin questions, and just some of your thoughts on it, and just unpacking the importance of decentralization. Why Bitcoin is capped, and maybe even some of the things that you think are the most innovative, whether it's proof of work or whether it's difficulty adjustments and some things like that. Maybe some things that kind of captured your mind in the sense of, wow, like this is something I just had no idea about. So I'd love for you to touch on some of those things that really kind of captivate you, or you think are really, really core proponent or core pieces of the Bitcoin network that are just so important for the average person to understand.
Yeah, maybe I'll start with something that you'll probably think is too simple, but in terms of when I speak to traditional investors about it, it really resonates. Which is, a lot of people think who don't know anything about Bitcoin think some guy named Satoshi built a spreadsheet and keeps an entry in that spreadsheet that has Matt owns 1 Bitcoin and John owns 2 Bitcoin and someone owns 1.5 Bitcoin. And they can adjust that over time. I bring that up because, at the core innovation of the Bitcoin blockchain was this solution to a computer science problem, which has been around for 30, 40 years, which is how do you have a database that's available everywhere in the world that's always accurate and updates in real time, but that nobody controls? Because if and I know this is way too basic, but if you imagine any one person controlling it, it ruins the idea of what Bitcoin is, of having a digital money. And when I say that, people are like, well, I get that if you say, what if Mark Zuckerberg built this e-gold, right? Would you trust Mark Zuckerberg not to change it from 21 to 22 million? Obviously not. But it actually extends to things that people set up as criticisms. Like, why couldn't a consortium of banks do it? Well, would you really trust Jamie Dimon to not adjust the number on this? There's just no track record of why you would trust them. And then even to go all the way to this, if you imagine that for Bitcoin to really succeed, I actually do think it needs to be owned by governments. Why couldn't the US government establish this digital gold database? Well, then would another government own it? Right? Absolutely not, because they wouldn't trust the US government, as we've seen just with treasuries and seizing them from other countries. You can't trust it. It's not credibly neutral. And the fact that we have a database that's owned by literally no one, but literally everyone at the same time, means you can trust it for the first time ever. And it's just such a huge computer science breakthrough. If you dig into the literature, there's some really fun papers from the NSA about cryptographic cash that got pretty close to Bitcoin almost a decade before it was published, but they didn't quite get it. Like, they didn't find it. They didn't solve the riddle, because it's a really hard problem. How do you have a database that's available everywhere, updates in real time, is always true, but but isn't controlled by anyone. And it's just such a fundamental fact. It's really, really incredible. The other things that really get me about Bitcoin, it's had 100% uptime over the last 10 years. The internet went out yesterday, right? Like 100% uptime is better than anything. It's better than Swift, better than Visa, it's better than Amazon, it's better than the internet itself. Has 100% uptime. It's processed $125 trillion in transactions without a single fraudulent transaction. It's like incredible, right? Like, and this is a system with no CEO, no company, no employees, and it's literally the most robust and accurate financial system ever developed. Not in theory, in practice over the last 10 years, with $100 trillion processed, 100% uptime. That's absolutely incredible. You mentioned the difficulty adjustment, and then I'll stop. I love the difficulty adjustment, and I love the halving paired with the fee compensation for congested transactions, because they both speak to just designing a system that could exist forever. The difficulty adjustment solves a problem that would have overwhelmed a V1 if you hadn't thought it through. The existence of fee revenues combined with a Coinbase reward that reduces over time solves the problem of what happens when you get to zero on that reward in a really elegant fashion. And it's almost like this immaculate design, right, that came down from on high and just works perfectly and is future-proofed against things that can happen. It's absolutely incredible to think through all of the things that we got right in V1. I know there have been updates, but essentially in V1 to future-proof this system for money that's worked perfectly, and I think will continue to work perfectly. It's really incredible.
I love that. Well, multiple answers, I guess, and it's I always try to speak to the average person, here at the very least, and try to bridge that gap. Because there's so many people that don't have any understanding. I mean, we go to conferences. I mean, I'm sure you see it too, and I'm sure you've even got it maybe yourself of like, hey, are you the CEO of Bitcoin? I mean, we've got
right.
it. I help advise and work with other companies in the Bitcoin space, small, Bitcoin companies, and they get it, like who is the CEO? Are you the CEO of Bitcoin? So just bridging the gap to the average person. That's why I love those answers and some of these questions, just because it's so important, just this education, so the average person can understand this. So I absolutely love it. Where, in saying that, do you think that a system, because this is one thing I get all the time too, is I've just had over the last handful of months, I've had debates with multiple family members saying, well, inflation, we need inflation for in capitalism. They thinking that inflation is part of a capitalism, even like that's inherent to capitalism, and we can't have deflation because people won't invest in deflation. Like you said yourself, you're not going to sell your Bitcoin, and and on and on and on. You hear these objections. What do you say to someone who is trying to go down the road, trying to understand, maybe already done some work on it, and they just don't believe you can have a system that's designed around a neutral money, a non-political money that's capturing deflation and redistributing those gains back to the people instead of what we have now, this cantillionaire, everyone, those who are closest to the money printer, they win the most. What do you say to someone when they're just trying to get into that deflation to understand this?
It's a great question. This reminds me of something that Jordi Vesser, who's an economist that I read, talks about a lot, which is we should be in a state where our standard of living just improves over time, because technology makes the world better over time, right? Like things should become more efficient. They should become cheaper, because as technology advances, that's the gift that it should give to us. That's what our human ingenuity brings. So it should be rising global life standards over time, thanks to technological advancement. Mm-hmm. And what inflation is sort of robbing that from us. It's rising costs to match these rising standards. We should be getting this great benefit from rising technology. Instead, it's being stolen by inflation. And it would be wonderful if that didn't happen. I would love everyone's living standard to naturally improve over time. People feel better about the world. And instead, we have this other thing. You can just look at the data. There's plenty of historical data on this in terms of how economic growth happened during areas of hard money versus areas of fiat money. And we can't be naive about it from a hard money perspective. There is a downside to it, which is that you tend to have more economic volatility, and that sort of negative events aren't cushioned by credit in the way that they have been under a fiat standard, and that makes sense, right? Like if you think about what the government has done during recessions and spending more, that sort of brings things up. It's like having a credit card, to go back to that analogy. And if you lose your job, like, yes, your experience is a little bit better because you can charge things on it and you build up debt. The challenge is that the payment comes due eventually. And so that suppression of volatility in the day-to-day economic life comes due in an amplified version at the end. And it sort of all sort of unspools. And that's the real risk. So it's not the case that economies grind to a halt. That's just not what the data says. What the data says is you go from having a little bit less day-to-day volatility and more episodic giant setbacks versus having a little bit more day-to-day volatility, but no big collapse at the end. And I don't know, choose for yourself which of those you want. But I don't love the episodic collapse. That's not something that I'm in the market for. And I think that's what the data suggests.
We touched on this just briefly a little bit, but I would love for you to unpack some of your thoughts just on Bitcoin lending. Obviously, you know, with Jack Mallers is announced, and I want to touch on also in a minute. Obviously, Saylor and the Bitcoin Treasury companies, Nakamoto, 21 Capital, and what's going on there. But we now see the lending space, and again, you briefly touched on this before, but I would love for you to unpack some of your thoughts of what you think this might unlock going forward. Maybe it's reduced selling pressure because people are now, you know, we talked about capital gains and some of those things earlier, but also conversely, you have maybe funds or Bitcoin that's not moving as much because now people are lending and borrowing against it and taking fiat out. So I'd love for you to unpack some of your thoughts and what we're just really starting to kind of see break out, it feels like.
Yeah, this feels like a pretty big theme. You know, I mentioned that there are a lot of investors with a lot of Bitcoin that have fiat-based expenses that they need to pay. And there are various ways to handle that, whether that's some of the emerging staking things or option overwriting on Bitcoin. But lending is going to be a piece of that. And you know, Bitcoin is pristine collateral, so it makes a great tool for lending activity. And as it's established into the mainstream, and as you see the integration of traditional finance and Bitcoin, which is what we're seeing in a major way right now, it becomes much easier to do that sort of lending activity. I do think the effect on the market will be on the margin reduced selling pressure. You know, in the same way that maybe in other crypto assets, you've seen staking reduce selling pressure as well. That's sort of a similar concept. Very, very different, I should be clear, but sort of a concept of generating income on existing position. Mm-hmm. And yeah, I think this is going to be a pretty big theme. The financialization of Bitcoin is a big theme right now. That takes place through the options market, but it also takes place through lending. So I think we're in inning zero of the Bitcoin lending boom, and it probably has a long way to run.
So Saylor, obviously the most famous so far of the Bitcoin Treasury strategy, and really pioneering a lot of different of the legacy world, you know, marrying a lot of the legacy tools and you know, whether it's innovating things, but also using the legacy tools available to innovate on top of Bitcoin. What do you see? And he's also coined this, obviously, the next 10 years, this Bitcoin gold rush. You know, number one, I guess, do you foresee anyone being able to catch Saylor and strategy and what they're doing? But also, is this something that we're just going to continue seeing? Like, I feel like it was like 7 or 70 last year companies. I can't remember my years and the numbers now, but now there's like 700 companies doing this. And now is it going to be 7,000 by the time we're at the Vegas conference next year? Like, how do you see this kind of playing out in the coming months and years here?
Yeah, I think there's going to be a real boom in this over the next 4 or 5 months. There's still, like, you know, behind the scenes, there are a huge number of deals coming through of people raising capital to do these Saylor-like strategies. I think you're going to see various different shots on goal. So I don't think anyone can out Saylor in what he's doing. He both has the brand and the recognition and the balance sheet that gives him the flexibility to design all these different types of approaches. But you're going to see other approaches, right? You're going to see permanent capital vehicles that just raise Bitcoin and then generate income off of it from things like lending. You're going to see these Bitcoin treasury companies emerge in every market around the world. It's no surprise to me that Metaplanet in Japan is one of the most successful and most volatile of these, because they have a very harsh tax regime on holding Bitcoin directly. And so this is another way of gaining that exposure. You're going to see these in every market around the world. I don't think we're at the end of this boom. I think we're probably in the middle of it. And I think, particularly early this fall, we're really going to see a big peak in it, and then we'll see where it goes from there. But yeah, I mean, Saylor is great for the space, and he owns a lot of Bitcoin. I don't think that trend is actually going to slow down anytime. I don't think it's going to slow down as soon as people think. I think this financialization of Bitcoin, this ability to raise debt or equity instruments into Bitcoin, I think there's still some legs to go on this train. So I do think it's continuing.
Do you think so? That makes me think of something. I'm going to bump this to now. I was going to ask you in a tiny bit, but cycle, where we're at in the cycle versus super cycle. Everyone's got their different opinion. Like, it's going to be a super cycle. We're not going to have the 4-year cycle anymore, and everyone's got a different angle, seemingly, of like how they're going to look at it. And it makes me think of, there's a lot of companies. I mean, Saylor, like you said, and he's got many advantages. Are we going to see? So, two-parter, I guess. Where do you see us in the cycle? And do we have our normal 4-year cycle, or do we hit a super cycle? And then also conversely, are we going to have a 50% drop again, depending on what your answer is, I guess? Do we have a 40, 60, 80% drop at some point? And then all of a sudden, a lot of these companies are looking around like, how do you see this playing out in the coming quarters and in next few years?
Yeah, absolutely. So I don't think the cycle is going to be as pronounced. In fact, I'm bullish on 2026. The reason for that is I think the two primary drivers of the cycle are the Bitcoin halving and then the economic cycle. It's tended to be aligned with monetary liquidity and with interest rates. That's the economic cycle. And then obviously the Bitcoin halving moves on a 4-year basis. The reason I bring those up is because both of those forces, in my perspective, are weaker now than in previous cycles. The Bitcoin halving gets half as important every time from a supply perspective. That's just sort of math in terms of the amount of supply being cut on a daily basis. And the monetary macro cycle is just no longer on the same 4-year cadence that it was, right? We're already at 4.5% interest. The likely next step on interest rates is down, not up. Monetary liquidity is actually accelerating, not decelerating. So I think it's just in a different place than it was sort of further in the past 4-year cycles. At the same time, we have institutional capital moving in, which is like a 5 to 10-year trend. And I just think that's a more powerful force than these historical drivers of the cycle. So I'm optimistic on 2026. I don't think there's a super cycle, though, and I don't think we've repealed volatility by any means. I think the thing to watch from a volatility perspective is how much leverage builds up in the system. Leverage can build up in the futures market. Leverage can build up in the lending market. Leverage can build up through these companies in the debt markets. As we look at it right now, the market's not particularly leveraged. But that doesn't mean it won't be, right? Like if the price dramatically detaches from $100,000 and starts running up.
If you're liking this interview, but you're just wondering, hey, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're gonna love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout, btc-tc.com. You're going to absolutely love these things. Now back to the show.
That tends to be pro-cyclical and you get people leveraging into that. And if that happens, then we will absolutely could have another 40 or 50% pullback. I don't think we've repealed those days, unfortunately. I do think we've probably repealed the 70 or 80% pullback days. So, you know, we're making progress. I think the forces that drove the cycle are reduced versus previous. But I still think this is a volatile asset. You don't get upside returns without volatility. And, I don't know, just think of those as opportunities to accumulate.
So are you a believer? It sounds like you are, correct me if I'm wrong, but it sounds like you're a believer in like M2 global liquidity really kind of driving the price of Bitcoin, following that chart in a sense.
I think it's multiple things. So I think any simplistic explanation is too simple, but I think M2 is one of the forces, right? I sort of think of Bitcoin's price as a ball, and there are these strings coming off of it, and global liquidity is one of those strings, and regulatory activity is one of those strings, and education is one, and passage of time is one, and debt and deficits is another piece, and interest rates are another piece, and geopolitical stability is another piece. And at any point in time, different amounts of strength are being pulled on all these forces in different directions. And it's the balance of those things that determine if the price is up, down, or sideways. So I always hesitate when people say it's just M2. No, it's not just M2, because like the Bitcoin ETF wasn't M2, and that definitely contributed to the price going up because it brought a huge amount of capital into the space. But it's not just the Bitcoin ETF, because if we were having crushing withdrawals of liquidity, that would have been negative. Or if we had a big regulatory setback, or if a country banned Bitcoin, it's just more multifaceted than any one piece. But to be sure, liquidity matters. I think it's it's a natural outlet for liquidity, and liquidity is a big driver. It's just not the only driver.
I love that analogy. That's a great analogy. Like the ball and the strings. That's a great visual for someone to really kind of see what is actually happening beneath the surface. So I love that. Do you look at when you think of Bitcoin? Do you think of it as a money, a currency, a commodity, just an investment asset class? Like, Sailor's very fond of just, hey, it's capital, it's pristine capital. And then there's collateral. Like, how do you see it as? Which one of those terms, or maybe it's multiple terms? How do you see it?
Yeah, I definitely think it's an investment asset class, but I don't think that's the primary descriptor, right? That's just sort of like a tool when you're building portfolios. So it only works from that lens. I think of it primarily as money. That's how I conceive of it in my mind, as this new pristine form of digital money. And the first time we've had money in a digital format or in a movable format detached from the state, which is what gives people some sort of discomfort. But I think of it as money. I mean, you can use it as money. You can store wealth in it as money. So it's money, and it's an investment or an asset class as well, which is fine. It can be both of those things.
Mm-hmm. Yeah. I think I agree with everything you said right there. That's kind of the way I see it as well. It's I always liken it to just one of my definitions of genius is just holding two opposing opinions in your head at the same time, or more than one thing can be true, right? It can be multiple of those things at once. And that's kind of how I see it as well.
Yep.
Are you of the mindset? So when I talk about price a little bit and kind of get to this, the part which I know a lot of people always like talking about, what are you of the mindset of like a Jeff Booth, where it's, hey, it's going to account for every dollar in the system. Not all $900 trillion are going to be accounted for by Bitcoin, or you may be more of a Jack Muller's camp where it hits one half of every transaction. It's $450 trillion. And that's kind of the TAM, or the total addressable market that we're kind of going after, or that Bitcoin is. Where do you fall in the spectrum of what Bitcoin's total, reach is, I guess, if you will?
Oh, wow. That's an interesting question. Let me think of how I would answer that. I think of it as sort of a series of markets with maybe like an orbit of markets with declining probabilities of taking bigger pieces. So to way to make that maybe more easily framed, if you think of the hard asset store of wealth market as 20 $5 trillion. That's primarily gold. That's like the first orbit. And its probability of winning that market to me is extraordinarily high. And its probability of expanding that market is also extraordinarily high. Like, I think that market will be bigger. So maybe that's a $50 trillion market opportunity, and it can take 75% of that market, and it has a high probability of that. You can then go out to sort of broader financial transactions like unit of account style transactions or denomination transactions or global. And those are all concentric circles before you get to those 450 or $900 trillion. And the way my mind works is you just have declining probabilities of getting out to those places. And I tend to think in probabilities. So I don't know how far out it will go. The beautiful thing from a investor's perspective is, who cares? Even if you just get this first one, it's the greatest investment of all time. And I have a high probability of that. And if you get that first one, your probabilities of getting these other ones improve as well, right? And it's sort of, people talk about it going from store of value to unit of account to medium of exchange. And that's sort of the way my mind works is it has to achieve this to achieve this to achieve this, right? Mm-hmm. It's like one of those. And so, and I think the probability is sort of like that necessarily, because you have to guarantee it achieves this before it can even think about achieving that. So I don't know where I end up on that, but I think the number is very large.
What is your outlook here over, I guess for this cycle, and then also we'll call it this 10-year, gold rush of I look at it, I guess, of the four phases of money, collectible, store of value, medium exchange, and unit of account. I feel like it's somewhere, in that phase 2 store of value. It feels like we're getting towards the medium exchange area, just depending on rules, regulations, and things that are happening. More people are using it. So we're really, like you said earlier on, at this exponential part where we're starting to kind of go up that S curve. Where do you see price in your mind over the next 6-12 months? And then let's extrapolate out maybe in the next decade or so.
Yeah. So from a 6 to 12 month perspective, the way we look at price is just by looking at supply and demand and thinking about investor behavior. So I can be pretty specific about that. When we look at supply and demand in the Bitcoin market, we see a fundamental mismatch between net new demand and net new supply, by which I mean Bitcoin produces 165,000 Bitcoin a year, right? That's the issuance, and that's the net new supply. And whether you look at ETFs or corporations like MicroStrategy or governments, they're buying hundreds of thousands of Bitcoin, maybe in aggregate 1 million Bitcoin. So there's this massively more net new demand than there is net new supply. And that means existing holders have to sell. And the reason I bring that up from a short-term price perspective is, if you think about Bitcoin's price, since really the ETF launched, it's gone in 2 phases. It went from 50 to 72, and then it treaded water for 6 months. And then it went from 72 to 100. And it basically has treaded water since then. The reason it stopped at 72 is that people are people, and that was the previous all-time high, and you had to work through people who were willing to sell there. The reason it stopped at 100 is people are people, and some people are willing to sell at 100, right? Like the 2 sleeping stop loss orders on River are 100 and 1 million, right? That's just like, because people are normal people. I bring all that up because I think this demand is just chewing through the number of people who are willing to sell at $100,000. And if I'm right and it persists, it will eventually exhaust them. And I think in the next 6 to 12 months, it'll move up to the next place people are willing to sell. And I don't honestly know what that number is. I don't think it's 117,321. I think it's probably more likely to be a round number, like 150 or 200 or 200K. And so I think there's going to be upside movement over the next 6-12 months because there is this excess demand. And our prediction at Bitwise is it'll get to $200,000 this year. But we could be wrong about that. But that's what I think. I think this cycle, which I'd really say lasts through this decade, like until 2020, 30, I think it probably gets to about parity to gold. That's my baseline prediction. So at current prices, that's a little over $1 million a coin. again, I could be wrong. Like, could go down. It's hugely risky. It's not financial advice. But if you think about, sort of the level of penetration it's gotten to in each cycle, this feels like the right sort of scale of penetration. And I think the supply dynamics are about right for us to get there. So that's our prediction at Bitwise: 200K by this year, $1 million by the end of the decade. We could be too bearish. We could be too bullish. But that's what makes it a prediction.
Yeah, I love that. It makes me think of, wasn't Fidelity? Did Fidelity have like a $1 billion price prediction in like 10 years or something like that? I can't remember. It was some. It's just like, oh, okay, well, that's, I guess, yeah, shoot your shot, right? Like,
yeah, I guess so. Yeah. Who knows?
It's amazing. Wait, so do you think we just mentioned, or we just talked about kind of how you see the taking in tranches, right, and the price moving over time, and there's declining probability of that because now it's just law of large numbers in a sense. Like, you have to keep accruing more and more people, right? So would it be safe to say, or, correct me if I'm wrong, do you see this diminishing returns in Bitcoin? And maybe you do, maybe you don't, but maybe it's not in short term, but maybe you do see it, 5 years or 10 years or 20 years from now. How do you see it? Because that's always a big thing too, obviously. And that's why people go into other assets, they like, oh, Bitcoin, I missed it. I'm too late. So I'd love for you to kind of square the circles. We're talking about summer of accumulation, and also people, we're talking about this taking in tranches, and eventually you tap out of the market, whether it's now or 100 years from now, obviously. So how do you square this circle, I guess, when you look at all of it together?
Yeah. I think that's right. Look, eventually it's going to be boring.
We don't have fiat conferences anymore, Matt, right? We have Bitcoin conferences, exactly. But we don't have fiat. So someday we won't have Bitcoin conferences.
That's exactly right. I mean, eventually it's going to be boring, and it's going to cap out. The world isn't infinitely large, or we'll stop caring about the fiat denomination. It'll just be priced in Bitcoin, in which case it's just a Bitcoin. Look, I do think we're going to get there. We're fortunate to be living through this age where that's not the case, where we're discovering what Bitcoin is. And that's sort of the age that you have this opportunity. I think this is a summer of accumulation, because I actually think it's probably the best risk-adjusted time to buy Bitcoin in its history. That doesn't mean the absolute returns are better. Obviously, it would have been better if you bought it when it was a penny. But there were so many attendant risks at that point. There were trading risks, there were custody risks, there were regulatory risks. You probably would have put it in Mt. Gox and then lost it. You might have had your wife put it on a hard drive and throw it out in a dumpster like that person. I mean, there were massive risks, and a lot of those risks have gone away, but the upside is still really substantial. I just mentioned we think it could be $1 million+ by the end of the decade. That's a 10x from here. That's hard to find in any market if we're right. So I do think, I think it'll eventually be boring, and that'll kind of be great. But we have many years. We have decades to go before we get to that point, and we're just really fortunate to be present in this moment. I'll give you maybe one last analogy. I keep giving these old school analogies. Maybe that's my role.
Great.
To gold. The world was on a gold standard for a long time until 1971, and gold was $35 an ounce. And we broke the gold. We broke the back of gold, and gold went from $35 an ounce to $800 an ounce in about a decade. And what was happening there was the world didn't know that gold had a role in a fiat world. The world was like, whoa, we're on this new system. What is the role of gold? Like, is it a barbarous relic, as some people referred to it as? Is it just this shiny metal that's used for jewelry? Or does it have a future in this world? And as the world realized it had a future in the world, the price went from $35 to $800. And today, obviously, it's 3,000 plus. But that was a unique moment to invest in gold. That was the best period to invest in gold's history, right? 5,000 plus years. That decade was the best decade. And that tells you that when the world sort of accepts that this new form of money is going to exist in the future, that's the best time. And we happen to be living through that in Bitcoin. The world is coming to accept that Bitcoin has a place in the world. And, that's why we're up, 100,000x, and why I think we could 10x from here. in the next 5 years, because we're living through that moment where the world comes to accept it. Once everyone accepts it and governments hold it and institutions hold it and pensions hold it, the returns will be much reduced going forward. But we're not in that moment now. Most of the world still owns no Bitcoin. Most of the world's money still owns no Bitcoin. That won't be true in a decade. And that's like a really unique opportunity.
It's incredible. I want to talk about price suppression, like any fear of price suppression. Are we dealing with it now in the future? And then last, I want to touch on this, 0.1 Bitcoin, again, end of summer of accumulation, like how important it is. There's obviously, retiring on 0.1 Bitcoin and the reframing for the average person of, hey, you don't need one Bitcoin, just keep accumulating.
Yeah, absolutely. Price suppression. No, I mean, I think you have to keep your eye on paper Bitcoin and the rehypothecation of Bitcoin, and that's something to be concerned about. But I think the forces are too big to overwhelm that. That happens on any commodity on the margin, and we're certainly seeing it in Bitcoin and the development of futures. And but I think the broader forces at work are just bigger on an order of magnitude. So it's something to watch, but it's something that doesn't much concern me or keep me up at night. I don't see like rampant paper Bitcoin dominating the world in a way that detaches from fundamentals. And I do see rampant accumulation of physical Bitcoin, in these ETF structures and these corporate structures, these government structures. And I mostly think that is a bigger deal. And then, to your point, we shouldn't have unit basis risk. A Satoshi is, point and then a lot of zeros and one Bitcoin. And that's something that you can own today. Every person in the world can afford a Satoshi of Bitcoin, and that's enough to get you started. And just because one Bitcoin has a high dollar figure doesn't mean you need to own one Bitcoin. Like, I don't own round amounts of Bitcoin. I don't purchase Bitcoin only in one Bitcoin segments. I buy Bitcoin when I can, when I want to, in the amount that I want. And I'm happy that I have what I have. And absolutely. Don't let the unit bias get away from you. I also don't own a full gold bar that weighs 40 pounds. Like, we don't, you can talk about institutions measure gold in tons and people talk about ounces. It's totally fine. It's still gold. Bitcoin can be divided infinitely almost. And the important thing is just to get some. And even, again, an important thing, you don't need to put 100% of your portfolio in Bitcoin. Our clients on average 2.5 to 5% Bitcoin. The really important thing is just to not be at zero. Right now, if you're at zero, you're 100% exposed to the fiat system. Do you have 100% confidence? Would you put everything you have behind this system that's teetering on, $37 trillion of debt and $1 trillion in interest payments every year? 100%? You wouldn't have 1% or 2% or 5% or 10% or something in a hedge against that? I just think that is that's it for me, from my perspective, from my personal setting. That's a crazy position to be. I would want at least some hedge against that.
Beautifully said. That's a great way to end it. Don't be short Bitcoin. Thank you, Mr. Matt Hougan, for being a playable character and to seeing non-playable characters. Thank you, sir.
Thank you for having me. This was fun.
If you can't get enough of these interviews and you want to deepen your education on sound money, wealth building, and freedom, you're not going to want to miss this playlist here. Happy binging. Check it out now. We'll see you inside.